From our world headquarters in New York, good morning, everyone worldwide. I'm Bloomberg Surveillance on Bloomberg.com and Sirius and XM. Betty Lou, good morning to all of you on Bloomberg Television. We welcome Mohamed El-Erian of Pacific Investment Management Company. Dr. El-Erian, welcome back to the program.
Thank you for having me on, Tom.
I am featuring in my blog today out on Bloomberg Business Week, Econo Chat, your wonderful phrase, commonality of purpose, in your op-ed today for Bloomberg.com. What is a commonality of purpose?
Tom, it's basically agreeing that there is one issue that is important and focusing our energies to address that issue. And what I'm suggesting in the op-ed is that if you look around the industrial countries, one thing really stands out, which is consistently policy outcomes have fallen short of expectations. It seems that policy is no longer effective. And we should ask the question, why?
Okay, why?
A couple of things. One is that there are structural changes going on. And the other is that we have lots of debt overhangs. As you know, Ken, you talk about it in the show, we came off a binge of borrowing. We came off what PIMCO calls the great age of leverage, of credit, and of debt entitlement. People felt entitled to do things on the basis of income they did not have. And now we have to deal with these overhangs. And history tells us that once you have overhangs, policy becomes less effective. You have to think in a different way about economic policies.
But there's policy and there's policy. We have some countries like this one going into debt and being expansionary. We have other countries like the UK on an austerity budget, and nothing's working. Or should we just say that nothing's working yet? It just needs more time.
We should say, first of all, it doesn't make sense for different countries to be doing different things without coordinating. That's part of the problem, is that you don't have enough coordination. And that's because you don't have commonality of purpose. The second element is to ask the question at the country level, why is it that we haven't had the outcomes we expected?
Well, is it because, Mohammed, we haven't had enough crisis? I mean, I think of the Atlantic Charter off of Newfoundland there in World War II. It takes a war to get those kind of commonalities of purpose together. But is it that we've been so successful, we need another crisis to jumpstart coordination?
That's my fear. That's my fear, is that we're going to end up waiting for a crisis to jumpstart it. So let's not do that, because crises have huge cost. I think it's simple. It's about human nature. We tend to do more of the same. It's what's called active inertia. You do something, it doesn't work, well, let's do some more of it, rather than ask the question, why isn't it working? And the point of the op-ed is to focus on the why isn't this working, rather than simply let's do more of the same, let's do more of the same.
When you look at this, and we have a lesson today in Japanese intervention, a unilateral intervention, I mean, it's highly unlikely the Japanese, as the Swiss, that they will succeed, isn't it?
It is highly unlikely. Step one is, of course, they surprised the market, especially since it came after the internal elections. So they're getting the impact of a surprise. Now people are asking what next, and in particular, is it coordinated or is it one-off?
I mean, you look at the one-off action of it, and can you benefit from an intervention? Can an investment house like PIMCO game an intervention?
Yeah, we don't play interventions. Interventions are unpredictable, right? We prefer to position for things.
Well, that was Mohamed El-Erian, PIMCO CEO there on Bloomberg Surveillance, talking about the moves this morning, or last night really, by the Bank of Japan to intervene in the markets.